currently in a swing trade on Fast, ticker Foxtrot Alpha Sierra Tango. I'm up over a point. It's going well. I want to show you guys today my swing strategy, how I knew to enter this trade, and how I swing trade over time that has helped me make money in the last 7 years that I have been doing this. So what I'm going to do first is show you all some live clips from my live stream of me going through and setting my live trade alerts. I want you all to pay attention while that's happening to try to kind of figure out what I'm looking at, how it's working. And then after that, I will give you all the objectively defined rules of the strategy, and we'll look at some examples of when it works and when it doesn't. It's important to watch when it doesn't work too, to know when to get stopped out for your losses as well. So hit like if you're interested in this. Hit the red subscribe button if you're new. For now, let's get into the live examples of me flipping through and setting swing trade alerts.
UPS looks sort of interesting to short back off this. Not the most exciting, kind of like Coke and McDonald's. Like, money utilization is bad, but if I short it at 186, like I'm hoping to get to 170 in like 2 months. Just 15 points on a $180 stock in 2 months isn't the worst thing I've ever seen, but we'll leave it and we'll make the decision when it comes. TXN, small gap up, but is a downtrending stock, so would not long it, so do not care. Raytheon, oh, I already have an alert on Raytheon. Oh, I set this alert already, okay. MDLZ. Nunca. Okay, we're getting down to some of the lighter volume stuff now. Oh, no. 3M is still here. 3M gap up on earnings, but is a downtrending stock, so I would not be longing it. So I don't need to set an alert there. CB, no. CNI, no. General Electrics, gap up, but downtrending, so I would not look to long. And remember, the overall trend has to be moving in the same direction of the gap filled and trade, right? So that's why I'm saying that, like, not setting alerts on some of these gap up stocks, because just about everything is downtrending right now. I'm not looking to take longs for swings. For investing, I like taking longs on the blood, but for swings, I gotta follow the direction of the trend. General Motors, we've already set our alert on GM. Not really even much of a gap here to worry about. I probably wouldn't even short this. I would already kind of call this gap closed. Close enough. I don't know. We'll leave the alert and we'll see when it comes back up. MCO, Moody's. It's a ratings organization, isn't it? CNC. Oh, I've already flipped through these. ECL. It's early, sorry. KMB. No. ADM. It's a gap up on a downtrending stock. No, thank you. Chipotle. Wow. Nice gap up on Chipotle. But once again, downtrending stock, so I would not long it back here at the gap close, but it's a nice gap up. What earnings do we have after hours yesterday? What earnings do we have this morning? I know, well, we all know Walmart is down a lot. Oh no, that's today. Today's Tuesday. We have Google earnings this afternoon after market close. But this morning we have UPS. UPS is slightly down. Not really much. Not really much going on here. We have Coca-Cola this morning. They are up slightly. We have GM. We are down. GM is down. We have GE. Let me set an alert on GM actually. It's not much of a gap yet, but if this keeps coming down and then closes this alert, GM would be a nice short. GM would be a really nice short. The stock's been really weak for a long time. McDonald's had earnings. They are about break even. Raytheon had earnings. I'm getting a ticker test right now. Raytheon was the first one I really had to think about. RTX. Raytheon is gapping down. Is this a short? Not really. Raytheon, I wouldn't really say is in downtrend. Raytheon's been an uptrend. I mean, I'll set an alert on Raytheon. I don't know if I would short it, though, because it's not really in downtrend. But if it comes and closes this gap, it'll be interesting. What had earnings yesterday? NXP? I don't know what that is. No. Let me go to the NASDAQ calendar, because the NASDAQ calendar actually has their ticker symbols. A lot of these companies, I don't know the ticker symbols. Oh, NXPI. Okay, has gapped down slightly as well. Just a little bit, though. Not really enough of a gap to get all excited about. CDNS, CDNS. Ooh, nice gap up here on CDNS. Okay. Excuse me. Decent little gap up. Once again, nothing to really rock your socks off there. Holy shit, what is this stock? What is NEM? Newmont Corporation. This stock's been going straight down. Whee! Jesus. Mutilated this stock is. I'll set an alert here. I'll set a swing alert at this one's earnings. Stock is super weak and down on earnings. Sure, we'll watch NEM. SCCO. Nothing there. ARE. Having earnings this morning. Small gap up. TTM. My 1 minute chart refuses to load again. Is anyone else's Thinkorswim having problems this morning or just me? Wow. PHG. Large gap. This stock's been stair-stepping down, stair-stepping down, stair-stepping down, stair-stepping down. It really has no range, though. This stock only moves on earnings. Down, sideways, down, sideways, down, sideways, down. Like, I don't think I'd enter a swing short on this. It's not, the money utilization is bad. You'd be sitting in it for months.
So that was all the live examples of me going through and setting alerts. By the way, just quickly, if you're using Thinkorswim and you don't know even how I was setting those alerts, wherever you want to sit one, right click, hit create alert, and then if you want to be alerted when that stock goes above a level, aka you're looking to short it, leave it like it is, or flip it to at or below, obviously if you want it to come below that level for you looking to get long. And then if you go to market watch alerts, you can see all the alerts that you have out sitting out there. So this kind of starts to act as a swing trading watch list as well. But anyway, that covers kind of the mechanical how do you do it, how do you set alerts part. But hopefully you guys kind of got an idea of what the strategy is, what I'm looking at when I'm doing that, and what it is earnings gap close reversal. So every morning when I log in, part of my pre-market routine, especially right now as we're in the midst of earnings season, is I look at this NASDAQ earnings calendar. I will link this in the description down below, but really just Google NASDAQ earnings and you'll see this free website shows you the calendar of what had earnings, what has earnings coming up today, things like that. And I just flip through them, right? As you can tell, a lot of the ones I flip through end up don't getting alerts on them. Not all of them get significant gaps. That's the first rule of the strategy, is that there has to be a significant gap. I'm showing you guys FAST, F-A-S-T here, as obviously this is the stock that I am in short. But let me type fast in over here so it shows my P&L. How I shorted this is that we got a gap down on earnings. Earnings occurred here, as you can tell from the alert, or the symbol on Thinkorswim, should I say. You got a gap down. It came back up. It didn't actually quite close the gap, but I liked this level so much. I thought this kind of previous support level was so significant that it might just end up rejecting off this. So I actually only entered half share size of what I really wanted. If it would have, as you could tell, if it would have come up, pause. If it would have came, Jesus. If it would have came up and closed the actual gap at 50. And by the way, if you don't know what I mean by gap, this is where the stock closed. So the stock on this day closed at $50, just slightly above $50. And then on earnings made a move. Earnings are reported after hours or pre-market, but while market's not open, earnings are reported. It made a move reacting to those earnings and opened the next day all the way down here at 47.64, right? So that's a pretty significant, nearly 10% gap, about 7-8% gap on the chart. I'd consider that significant, and you're looking to short it when it closes that gap, aka trades back up into where it was previously trading before the earnings were announced. I love this strategy because it's not just technical analysis, right? If a stock moves because of what happened on earnings, that means real numbers came out that affect the bottom line of that company, and the stock market judged that the company deserves to be trading down here based off that. Then you get a chance to enter the direction of the same, you get a chance to enter that same direction that the stock market reacted to at the same price it was before those numbers were announced. It just makes sense, right? It just makes sense. Well, okay, the stock market didn't like it at this price when those numbers were announced, so I'm going to guess it's still not going to like it at this price. It's going to reject it again as we're starting to get here. And as you may be able to tell from some of my other lines, the stop loss on this strategy is the high or low. This is obviously a gap down, so a gap down would be the high of the gap candle, meaning the day that it gapped down, the day it had earnings. The high of this is your stop loss, and the way I trade it is the bar has to close over this level, not just stop as soon as it breaks, but if a daily bar were to close over 51.21, that's where I'd stop out. And the profit target is the low, once again, or high, if you're looking at longs, of the move on earnings. So the low after this gap down, the low was in the mid 45s. So that's my profit target on this trade. Now, the next thing I talked about a lot is macro trend. Why else did I take this trade? Why did this trade meet my rules? Because this stock, FAST, is also in macro downtrend. That means over time, scroll out, right? Scroll to the left. Over time, over the last 4, 5, 6 months here, it's just been making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. It's in downtrend. I will only take a gap close trade that also meets the current trend. So a lot of the stocks I looked at, most things are in downtrend right now, right? Because the markets are weak. We're in a bear market currently as I'm making this video. We're in a bear market. So most things are in downtrend. So really anything that I was looking at that had gapped up, I was pretty much going, nah, I'm not going to take the trade, because if the stock's downtrending and gapping up, I don't care if it closes that gap. I still think, and over time I've learned that it's still so likely to just continue following the macro trend. It doesn't matter as much. Now, of course, as I'm saying all of this, obviously it doesn't mean that, stock closed the gap. Trey said it has to roll over now. It's closed the gap, but the macro trend is the wrong way. So Trey said it can't bounce. No, I'm never saying stocks have to do something, right? It's all about gambling with an edge. That's trading. It's gambling with an edge. That's why you have to have a stop loss, know where you're going to get stopped out if it doesn't work, right? Because of course, this could just turn around and squeeze on me. Anything can happen in the stock market. It's not, it gapped down, it closed the gap, it has to roll over now. There's no such thing like that in the stock market. It's all about playing your odds. So that's why the stop loss is so important. So that is the strategy. One more actually very important thing that I throw in as well is that I also will do quick fundamental analysis on my swing trades. When I say quick, literally like 30 seconds. I'm not reading 10Ks, reading 8Ks, reading filings. It's not that intense. I'm not looking to long-term invest in any of these companies. So I just want to make sure the valuation is also on my side. So what I do is I go to, I just Googled fast stock Yahoo. I go to the stocks Yahoo page. And if you don't want to do anything else past this, at least look right here at Yahoo's valuation. Yahoo says it's overvalued. You can just look there. Okay, great. It's overvalued. That means it's valued too high. That also works in the direction of you wanting to short it, right? But I do a little bit more than that. I click on the statistics tab here. I look at market cap versus revenue. Fast has a $27 billion market cap versus a 6.5 quarterly revenue. That's pretty bad. Like, that's a pretty bad ratio. And you'll start to figure out these ratios a little bit more yourself. And maybe I'll make a video kind of on how I do my valuations a little bit more in detail. But I just want to get the idea in your head now. It has an over 2 PEG ratio, which is really high. It's got $764 million in debt and only $247 million in cash. That's not great either, So I do click on the statistics and look a little bit into it. But at the very least, you need to make sure, the valuation, even if it's just this, is in the same direction. So it's either undervalued or at least near fair value if you want to long it, or it's overvalued if you want to short it. That's another thing I implement into my strategy. So here are the swing trade rules. If you want to screenshot this, whatever, here is my straight up set of objectively defined rules. Set alerts at significant earnings gaps. Now, I just used the word objective, and I understand immediately this is not objective. It's not like, oh, the alert has to be over 5%. That's kind of up to you to define. It's like, what sort of risk reward do you want in your trades? Like, you also heard me say while I was flipping through stocks, I talked about money utilization. If stocks aren't really very volatile or the gap wasn't that big, I just won't take the trade because I'm not really willing to have my cash sitting in a trade for 5-6 months and it not really doing anything because it's not volatile. The gap wasn't that big. So that's something else you kind of worry about. And that's kind of up to you to decide, right? How much do you want to be making in this trade? Each trade you take, how long do you want to be sitting in trades? That, that determines, maybe you don't go swing McDonald's. I think McDonald's was one of the ones I skipped over. McDonald's just doesn't move that much. It's a huge dividend paying company. It just doesn't move all that much. I'm not willing to swing trade a stock like that. So, yeah, a significant earnings gap is kind of up to you to define. The macro trend must match. We talked about this. Only short if the overall trend over the last couple of months is down. Only long if the overall trend the last couple of months is up. The quick valuation check must match the direction. That's the Yahoo page we just showed you. Overvalued for shorts. That's matching direction. Then you enter at gap close. Your profit target is the high or low of the earnings report move, obviously dependent if you're longing or shorting. And your stop loss is close, under, or over, obviously once again depending on if you're longing or shorting the gap candle. So hopefully you all enjoyed that. Hopefully you like seeing some examples. Well, one, this is I'm literally in this trade right now, but seeing some examples of me setting my alerts in real time, showing you a trade I'm in right now, and then going over my objectively defined set of rules that you all now have. As with any strategy I teach you, please do not just go, oh, I watched a video, I'm going to go trade like this now. Look at it yourself, backtest it yourself, paper trade it, maybe prove it to yourself that you can make it work, because everybody's mental is a little different. Even if you have the rules, not everybody can make every strategy work. So please prove it to yourself before you just start trading it. But this is how I swing trade. So hopefully you guys enjoyed this video. Hopefully you enjoyed the swing trading content. I know I'm just about always posting day trading stuff on this channel, but let me know if you enjoy the swing trading content too. Maybe I'll bring some more of this to you all. So hit the like button if you do. That's the easiest way to show me. Hit the red subscribe button if you're new. I post trading content on this channel every single day. With that being said, I'm going to go ahead and sign out of this video. I will catch you all in the next one.